The internet is flooded with trading scams and the illusion of overnight wealth. People drain their savings because they approach the financial markets looking for a quick payout, rather than treating it as a legitimate profession. By the end of this video, you will choose a specific market, set up a secure platform, learn to read a price chart, and open a zero-risk practice account. Before we start, you need two things: a dedicated notebook to document your process, and a strict commitment to 1 hour of focused study every day. The traders who actually extract money from the markets spend 12 to 18 months in a highly structured learning phase. Abandoning the desire for quick profits to focus on this long-term timeline is the only proven method to survive and achieve consistent profitability. Step 1 is deciding where to deploy your capital. As a beginner, you have 3 major options: the stock market, cryptocurrency, or Forex. Trading local stocks is like opening a business in a small, isolated village. Your growth is limited by a small population. Forex is the global currency market. It operates like a connected, sprawling metropolis, offering massive global liquidity and continuous volume. To access Forex, you need a broker. A broker is the essential middleman that takes your buy and sell orders and executes them in the live market. Anyone with a website can claim to be a broker. To protect your capital, you must verify that a broker is legally regulated in your country. This ensures your deposits are held securely, and the company cannot simply take your money and disappear. Once you have a regulated broker, you need a front-end platform. Software programs like MetaTrader 5 or TradeLocker serve as your primary digital workspace. This is the interface where you will actually view the charts and place your trades. Locking in a verified broker and a charting platform ensures your money is secure from technical failures or theft before a single trade is considered. Now we need to look at the charts. The market visually communicates its overall direction through 3 specific macro trends. A bullish market is defined by price moving consistently upward. A bearish market is the exact opposite, locked in a steady downward trajectory. A ranging market occurs when price moves sideways, bouncing horizontally between established high and low boundaries. These large macro trends are built by thousands of individual data points called candlesticks. A green candlestick represents a time frame where the closing price ends higher than the opening price. It records the open, close, and the highest and lowest prices. A red candlestick forms when the closing price falls below the opening price. At the top and bottom of these solid bodies, you will notice thin vertical lines extending outward. These are called wicks. Wicks tell a psychological story. They represent a momentary tug-of-war where buyers or sellers push the price to an extreme point, only to be aggressively rejected and forced back before the session ended. Mastering this basic visual language allows you to strip away complex, confusing indicators. You can determine exactly who is in control by focusing entirely on historical price behavior. Even with perfect chart reading, blowing an account due to poor risk management is the fastest way beginners are forced out of trading. Professional traders protect their capital using the 1% rule. This is an absolute mathematical standard applied to every single trade. If you start with a $10,000 account, you strictly cap your maximum possible loss at 1%. That means you construct your trade so that if you are completely wrong, you lose exactly $100. Following this formula guarantees survival. You can endure 5, 10, or 15 consecutive losses and still have your capital intact. Committing to this mathematical limit removes emotion from the process. It is the dividing line between a reckless gambler hoping for a payout and a professional running a sustainable business. Do not fund your live account with real money yet. Your next step is to use a demo account. This is a simulated environment that mirrors the live market data perfectly, but uses fake capital to execute trades. Go to your broker or trading platform right now, navigate to the main menu, and select Open Demo Account. Your immediate homework is to log in to this practice environment. Scroll back through historical data, draw out bullish and bearish trends, identify the candlesticks, and practice calculating your 1% risk limit without financial consequences. Completing this setup provides you with a risk-free workspace. It ensures the next 12 to 18 months of practice are built on a professional, risk-averse framework designed entirely for long-term wealth creation.